Hi, folks. This is Lee with the Market Sense. This is the week of April 30th, meaning we're heading straight into May for 2019. The charts in this presentation are provided to us by Gettess and their Trade Navigator software. And looking at a weekly bond market chart here, you can see there's not a whole lot going on, but I think overall you have to be rather impressed with this. They are holding up kind of sideways here in the face of a very strong stock market, and that's not always the case. A lot of times there's asset allocation. If they're buying stocks, they're selling bonds, and they don't seem to be doing that now, so that's kind of interesting. We were kind of looking at support in the 146.10 area with resistance around 147.28. Those are the two red lines you see there. I think the really important thing on the upside is if they could exceed 148.16. That would, if you drew a line like right across here, going back into this one, if they broke above that, that would be pretty impressive. That would probably mean they were at least going to test the highs, if not break it. Until then, I think sideways is about all you can assume they're doing, and it won't surprise me a lot if they turn down from here. But again, they're doing a pretty good job of holding up considering stocks have rallied so strongly. And stocks rallying strongly is exactly what we're going to look at here. Support this week was about 29.27. If you didn't get a chance to buy that, that's over. No sense trying to chase it now. They are up into what would constitute resistance, but you don't want to sell new all-time highs. That's just kind of silly. There's a couple of things that could be negative about this market, and I emphasize could be because they are at new all-time highs, and that's not a good thing to argue with. But you can see it's taken them about half again as long to rally back to the highs as it took them to break down from it. That's by itself not a super negative indication, but it does indicate a lack of enthusiasm, if I can put it that way. I mean, this is pretty relentless, but still, they came down a lot easier than they went up. So that's one thing. The other thing I'd like to point out, and we're going to go look at a monthly chart here to do so. I mentioned this a few weeks ago, and it seems to be coming to fruition, so I want to mention it again. We have a setup here that, as far as I know, was originally identified by Edson Gould, probably 50, 60 years ago, called a megaphone pattern. This is like a guy standing here talking out a megaphone. It'd get wider at the end. Wells Wilder called this a reverse point wave because Wells Wilder is much better at coming up with clever names for stuff. But same basic situation. The market is rallying, makes a high, backs off and makes a low, then turns up to make a new high, then breaks down and takes out the previous low, and then turns back to new highs again. That's what constitutes the reverse point wave megaphone formation. And what you're looking for then is a breakdown out of this. It's not predictive. You don't sell it up here. But like in this case, it would take a break of 28.44 right now to fulfill this pattern or indicate a sell coming off of the pattern. I don't trade this personally. I don't trade monthly charts, but I see the pattern is here, and I think it might be something to look for in the big picture. It would actually probably be a better looking pattern if May continues higher, and that won't invalidate the pattern at all, and then maybe you get a breakdown in May or something. That would probably look a little better. Right now we just have a marginal new high and very marginal. So, to see May go even higher and then break down would probably be a better use of this pattern. But I just wanted to let you know the pattern is there. There are reasons to think that maybe this isn't all that strong. And if I could just bore you with fundamentals for a second, it looks quite likely that we're going to have a presidential campaign that is Donald Trump against some rather liberal Democrat. And when the parties are that far apart, I think you'll find business owners and CEOs are just kind of sitting on their hands waiting to see what happens rather than spending money to hire people and expand. So it wouldn't surprise me to see a slowdown in the economy here. But I don't trade off fundamentals, just thought I'd mention it. So that's what we've got for you today. I hope you can find something profitable to get yourself